Welcome back, folks. Dow right now is down 120. You get the NASDAQ off 55. S&P's down 17, and it's Thursday, so we have natural gas.
It sure is.
Coming at 10:30.
You got it. So right now it's about 10:18. We get those numbers in about 12 minutes from right now. Here is the natural gas contract. We're looking at the November contract. You get natural gas trading at 323. Quite a number, man, from last night. Did you see this? So we were trading yesterday. End of the day yesterday at 334.
Yeah.
We were trading at noon yesterday at 325. Talk about some volatility.
That's $1,000 in the future market.
Big money, big moves. So we get those numbers coming up. We're going to jump around, see what kind of trade possibilities are present, maybe looking for some volatility as we come into the EIA inventory numbers at 10:30. I'm going to start things off with the 11 a.m. We're into spreads. We're into the 11 a.m.s. They expire at 11 a.m. Now we have natural gas trading right at 324. What's going to happen here is that we have 325 that we can use as an option for our kind of pivot point where we have bullish potential. 325 to 345 would be buying that spread. We're going to be out of the money by a penny here, so that's all going to be kind of premium, $8 on that contract. On the negative side, we're going to have that penny of intrinsic value this time, so it's going to be about, I was going to say, $10, which amounts for the intrinsic value. You paid the penny, plus a similar amount of premium. So you're looking at $25 or 2.5 pennies.
It's not bad.
Yeah, and especially if you're a little bearish, because you got a penny head start to the downside, right? So that is your 11 a.m. expiration. If you wanted a little bit more time, see what kind of money that's going to cost you to pay for that extra hour.
325.
So you have the identical spreads, right? So to put them side by side, which nice is, and this is what's always cool. Check this out. So right away, even if you're just making a bullish spread, right? Bullish trade, these are almost ticking to the tick. So they're not even charging you for this extra hour sometimes.
That's cool.
Right?
Wow.
You know, this is why you want to get used to it. Download the demo account. This is your 12 o'clock expiration. This is your 11 o'clock. And you can see that now there's a little bit of a bid-offer spread.
Yes.
Okay, which is why they're probably comfortable giving you an out-of-the-money bullish spread that doesn't have any value until 325. They're giving it to you at 325.8. But why would you ever buy the 11 if the noon is sitting out there at the same deal, right? That's why you want to go over these left and right. So I'm going to close we'll put the 11 in the back. Here's our noon bullish spread. It's going to cost you that same 8. And then on the flip side, your bearish spread, that is going to cost you a very similar 19.
Look at that.
Versus, this is our bearish, costing you about 18. So almost an identical trade for the extra hour there. Pretty remarkable.
That is remarkable, man.
Yeah, so 8 plus 9, 27, call it 2.7 pennies. Yep. Now let's see how the dailies, excuse me, that's the 12, how the dailies, when I say daily, talking about till 2:30. So we've gotten a lot of movement in the price of the underlying November natural gas contract. And the reason why, just to explain the methodology, right? Here are the 230s. Well, they use basically 330 being the midpoint of the middle spread and then your upper bound. Well, that's because we were just trading at 330 right here at, early this morning when these got set. And much similarly, I'm sure that these dailies, are going to have a pretty similar setup with 330 being a price point that you can use there. So if you're looking for volatility in terms of spreads, bullish potential, bearish potential, the 11s and the 12s line up, and the 12s line up especially nice because of the very little premium for that extra hour they're charging you.
Let me pull this baby up.
And it's not bad when you get 9 penny moves in natural gas up and down in the 24 hours coming into the number, as in, you're looking for an EIA number that might give the market a little bit of a push one way or the other. But guess what? You might not even need an EIA number to get some volatility in this market.
And that's for sure, particularly about how this is traded. So we're at highs. This is interesting. So you're at highs. Let me pull this a little bit closer.
When you say we're at highs, are you talking about like last night we're at highs?
Well, for the last 6 days.
Okay, cool.
Okay, so you got to spike lower. Interesting. Okay, so we'll see where it shakes out. That's telling me we can still go lower. And that's quite, if we go lower, man, it's going to be quite a move, because just this morning, is 331.
It's already quite a move, right?
It absolutely is, man.
It is. Quite a move up and then quite a move right back down.
We're going into the fall, but the other side of that, I guess, is that look where we just came from. We just came from 274.
Yeah, crazy.
September 14th.
Right. What's it today? October 18th? So you're talking about basically a month? Right.
Big numbers.
Quite a run.
Welcome back, folks. So, natural gas.
Started off, we have a rise of 81 billion cubic feet. Expectation was somewhere between 85 and 84, so slightly less than what they were looking for in the expectation. Less supply, higher prices. You got natural gas spiking from about 324 to 326. We'll see what happens. But that's the news. That's the number we're waiting for. And the reaction is what you'd expect, as in, you know, you got less supply out there. Supply equals demand is where price hits. Of course, you get a little bit of acceleration, but nothing too dramatic in terms of 81 billion cubic feet, expectation of about 84 to 85. And with the volatility we've been having, we'll see where it shakes out. Now, again, you know, when we're making this possible trade setup, you were looking at action with a pivot point of basically 325. So 325 would be your max loss there. You'd want volatility away from that point.
Baby,
yeah, so you had a little bit of a head start to the downside. So already, you know, not the exact direction you would have hoped for in an ideal world if you were making that volatility trade on both sides, but you'd have until noon. You got an hour and a half left. We'll see where the market goes.
Welcome back, folks. Dow right now is down 68. NADEX off 51. S&Ps are down 13. And let's check back in on the gas market here.
Well, let's do it. Let's see where we're at. It's natural gas. Just kind of hanging. Just kind of hanging. Not where you'd want it to be if you're making that volatility trade. You'd still have till noon. You'd have over an hour. Doesn't mean it can't jump one way or the other. But again, 325 is where we start to gain value on either side of that, with 325 kind of being your max loss if you're taking volatility from that point. So we'll see. Kind of a tame 25 minutes following that number, and we'll see where the market goes.